Hi, everyone. Hope everyone had a decent week, a good week, earned or learned. Preferably both, earned and learned. Okay, so Friday's a good day to see, who's coming out a victor. How you doing, Bob? And you have to say, and give it the reality that occurred, is that you have a reversal candle to the upside in euro. So even though I'm skeptical and I think there's lower levels, you have to respect it. I'm not saying that we can't start off higher next week and then fail, but it did what it did. There would have been a better long than my trade selection. The Swiss really didn't give it back as much. This was turnaround Tuesday, and then I had another scalp here, and I've left it alone. But compare that candle in euro, which was green, and you would expect the inverse in Swiss, but it's still green. So it did nothing wrong on a weekly basis, the Swiss. And the dollar, I think Steve will identify it. I don't know if you could call this what kind of candle it is. I mean, we're still a little higher on the week, even though we're lower than the opening of the week. So at least direction to the upside has stalled out. That's all I could say. Is it a bigger top? I think we'll know next week when I look at the action. It almost looks like a flag to me, right? You have a straight line move, and you have a bull flag, and it breaks out back over 97.20, 97.40. We're at 98.5 in a hurry. So the yen was pretty interesting this week. Last week, my forecast was for lower, and I was real early, and then I, added up here at the 78.6, 1390, and then got the breakdown from the wedge. And then yesterday, when I thought S&Ps were going to at least rally from that 2680 level, although it went to 2670, covered yen shorts and scalped it. I didn't think about reshorting on this rally here, so we're challenging these lows with stocks under pressure, although stocks are way off yesterday's lows compared to the yen. So what I think might happen here on a 1 hour in the yen is, if I'm looking for a bull case, around the 113 level, perhaps we get this. It'll be a little wedge, right? Something like this. So that's going to take it to about 1280, and we'll see what happens. But the most important formation that you have to give kudos to, pretty ugly week, and it broke down from this rising wedge, and it's gotten through a lot of support, and it's not a good looking week. Let me get rid of these fibs so you can see it. One more. Who needs fibs? Who needs fibs? Yeah, hi, Steve.
Good morning. Just, completely theoretical knowledge, but if you zoom out to the previous daily chart, if we consider that a climax, the previous high, and this an ascending wedge, according to Bulkovsky, he has written the most famous book on technical patterns, right?
Right.
Ascending wedges are very potent and reliable signals, especially when they form after a climax. So if you consider the previous high a climax, and this is an ascending wedge, looks good.
Yeah, we're going to 110 because we should have equality, or there, wedges retrace 100%, but maybe we have 1.618 from here, from 114. That'd be a pretty big move, maybe even 108. So don't short bonds with this going on. That's all I could say. I looked at the TLT and I thought we'd get one more low. But if the yen's rolling over for that kind of break and they're tied to treasuries much more than risk in the market, I don't think I'd be short bonds. I'd just be short US dollar yen. I'm always looking for the, correlation. But it's ugly and it's a bad week. So I think we have some information on the yen. Proved itself to the downside, as Steve was saying, and lower high, all of it. Pretty, I can't think of anything bullish here. So that's the way the dollar and some of these currencies look into the end of the week. Actually, that's falling, and I was looking for just a bounce in gold, but if this is going to really take a hit, it's not supposed to be too bearish for the metals. And I remain bearish. I think this will really be the test. All gold did was rally back. Right now, to me, it looks feeble. This could be a shorting opportunity if we're going to retest the lows. And, here's $40, rally back to 1220. And then you take 1.6 of this ABC or 3 and it's 4, that takes you down to 1160, 1.618 of this decline from the highs. So we'll see if US dollar yen could go down and gold go down at the same time. But of course, like David reminded us, and I think it goes all the way back to the spiral calendar guy first mentioned it to me, Chris Carlin, okay, that the peg between the yuan and gold. So this continuing higher is bearish gold. And like David said, if we slap those tariffs on, they're going to weaponize the yuan, and they'll let it go. And that should be the final flush in gold. But we'll see. I see a lot of great things setting up. So, it's a good time to have the team on your side. I know it's the holidays and we're thinking about other things, but, Grega, and I tweeted the piece, he called the collapse in Bitcoin this week. He talked about a bounce in the euro. So it was spot on many things. And, Steve, bought the bottom in crude. And Blake's had several successful trades while the yen was going down. I know Amanda was short guppy, okay, with what's happening in the UK with Brexit. So, I mean, there's so many great traders, and I really do believe it. It's not just a teaching. I've seen it even in my own life. If you surround yourself with great traders, you're going to rise to that level. It's kind of like, they say hang around with positive people to maintain your proper mental attitude and to avoid negative people. And here you really have an environment here that I think if you can't make it here, you can't make it anywhere. So, kind of like the song New York, New York. So sign up for a trial minimum and get ready for this fall season into the end of the year and build up your war chest, because I'm thinking towards the end of the year, sometime after the rate hike, that the dollar is going to be pushing new highs, and I think it's going to be a failing rally, and it's a linchpin for everything. So everything that's been depressed, most commodities, including things like wheat, that's why I brought Angie on, there are other instruments to take advantage of where actually central banks have no impact on. They can't print soybeans, and they could raise rates all they want, and it's not going to, affect the crop and the supply. It's about weather, supply, demand, tariffs, all of that. Pretty pure plays. I like the way the grains trade. And So see, we bring you everything, you know, we don't cover grains, but every day you're here, we open your eyes to new ideas that we think are good for you. I mean, they may not be the best sales approach that we could take, but our sales approach is to build you up and edify you every day with everything, whether they're potential competitors or not. We're just interested in giving you content to make you better so that you could be strengthened. And we encourage you by talking about our mistakes, because all traders make them, so you don't get discouraged when you do, and that we don't ride things 100% of the move. You know, maybe we'll take a piece out of it, a third, a half of a move, and learn to be satisfied with that. Because, you know, let me tell you something, if you're not satisfied with a winning trade because you could have made more money, when are you ever going to enjoy the business? Right? If a winning trade, you're still miserable about it because you didn't ride it all the way, you're going to have a miserable experience trading. So get your head straight, okay, and appreciate everything. Small victories are important. You know, not everything has to be a home run ball. Just grind it out. The best traders I know grind it out. They don't swing for the fences. And you're surrounded with people who have that discipline in the members chat. So sign up today and hang out and let us strengthen and encourage you every day. And also, if you're not that happy about the broker you have, definitely get a hold of the guys at Forest Park FX. Okay. Great guys, right? They have, anytime I've talked to either of them, they're gentlemen, and they really do care about their people like we do. You know, you're not just a number and, you know, the revolving door. You know, we pride ourselves on retention here. You know, most people who sign up, not that many leave. You can't prevent them all from leaving, because a lot of people just have to make that search for the Holy Grail and find out eventually there isn't one. It's all within us and not from the outside. So there's the end of my wrap. Thank you, everyone, for your appreciation of the hard work we do by being a subscriber. And I'm going to turn it over to the CEO of ForexAnalytix. You know who that is, Dr. Blake Morrow.
Doctor,
exploiter of markets.
How you doing this morning?
Okay, buddy.
Good. Happy Friday to everybody. You know, I was sitting there and we're talking with the guys in the office like 30 minutes ago, trying to figure out where the clear winner is going to be in all this. It's you know, I've been playing the euro to the long side because ultimately, you know, if you know, the Fed's gonna start to have to, you know, put on the brakes a little bit as the economy is starting to slow. You can see these buybacks are having less effect. Stocks are starting to get a little weak. The economy is starting to slow. We're starting to see cracks, and so the Fed's going to have to probably pare back a little bit, and that ultimately it should lead to dollar weakness. Now, does dollar weakness mean cable strength? I don't know about that, but because we were also talking about like the implications of Brexit, and the thing about Brexit is we're really, you know, I know there's a lot of concerns that Theresa May might have a no contest vote, but you know, the fact of the matter is they're going to have a huge another long timeline trying to renegotiate everything. So what are you going to do? Are you going to, you know, take Article 50, give it an extension? Are you going to have to renegotiate with Europe? You know, the risk is that you go into a hard Brexit, and Europe doesn't want that. The UK doesn't want that. So it's to everybody's, you know, whether or not, you know, the MPs agree with Theresa May or not, people are going to have to fall in line or risk of a complete disaster, right?
And this divorce, Blake, is the UK the husband or the wife?
I'd say the dog. No, just kidding.
They're fighting over the dog.
They're fighting over the dog. You know, I don't know. It's but really the point here is it can get really messy really fast, and that's not good for anybody, right? So
yeah, uncertainty.
Yeah, if you're with the EU, you're on the EU side. You're going to try. I mean, of course, this is hard negotiation right here. But if you're on the UK side, it's like, okay, you know, you have to, like I said, you have to fall in line or you know, risk of things going to hell in a handbasket. So, you know, it's a hard call. And until we hear that there is a hard Brexit, that there is going to be, you know, no contest and Theresa May is, you know, ousted. Unless that happens, man, I don't know. It's hard for me to be short the cable down here. I don't necessarily want to be long either, but I'm going to try to err on a side of optimism. And, you know, that's what, you know, it takes me over to the euro dollar, and I'm looking at the euro. It's like, okay, you know, let's take a look at this technically. So the euro broke some pretty key support, which was 113. This week is going to end up proving to be a false breakdown. So just so you know that, right? You know, you had a weekly candle, and look at this hammer. If we close near our highs, which let's just for argument's sake, let's say we close above 113.50. We're going to close near our highs. That's a false breakdown. Also came within striking distance of the 618 retracement, and you know, now you have risk of the euro moving higher. So I'm already erring on the side of, all right, let's be bullish the euro. Does that mean I want to be long the cable? No, not necessarily. I'm just saying that from a dollar generally general dollar perspective. Then you look at the dollar yen, you start thinking about like global growth slowing. Look at Intel announced whatever the buyback amount was it $15 gazillion yesterday. Nasdaq's getting crushed. Nvidia missed. It's bad for the tech sector. You know, stocks look weak here. I know we hit the 618 and bounced yesterday, but this hammer, we can't produce a bullish sign over here. So, you know, what do you do? I mean, it's a tough call. I think the dollar yen's actually the short, and I'm not short. So just so you guys know that, I think the dollar yen's the short. I'm a little nervous while we're above this red trend line here, you know, above 113 basically, but it seems like that's the short. That's the pair that you want to be on the short side. Again, I'm not short. I'm just saying, and I'm speaking out loud here. And you know, my suggestion to my office when we were talking about a half an hour ago or whatever, I'm like, where is the clear winner? Maybe it's precious metals. Maybe it's gold. I did buy gold yesterday, just, you know, as a disclaimer. I picked it up yesterday. It's not at a great price either. I own it at like 12.11 or something like that. But you know, it's like, where do you go? You know, where do you? And I picked up a small position in gold yesterday. I do have some FX positions too, but I'm just saying that I did buy gold. I don't want to get too excited about it unless we're above 1240. But you know, again, I'm just trying to figure out where the best place to be is, and I'm not 100% sure. It's, you know, I did tweet the other day, you know, maybe the trade is buy gold, sell yen, and frankly, was 2 days ago. That was and seems to be the trade at the moment, is, you know, buy precious metals, buy yen. But I'm not short dollar yen at the moment. You know, I bought a little euro again, like this morning. I bought and sold it and bought it and sold it. I own it just a couple of pips away from here, just kind of scalping in and out since it's Friday. But I'm trying to think longer term, like what's the theme here and where what do you want to do? And it's a hard call, and I think that's it. And let me also mention that this year has been extremely challenging from a trading perspective. If any of you guys are finding it difficult, it is, especially if you're just trying to take like a long or short dollar position. It's very difficult. There's a lot of crosswinds going in both directions. So, unless you're just pulling profits immediately, which I've been doing a lot of scalping, unless you're pulling profits immediately, it's been pretty tough. So, it's like, the euro's up one moment, or 1 8-hour time frame, and then it's down again, then it's up again, then it's down again. It's like, it's hard to get a clear direction here. Technically, you look at the euro, and we've stalled at the 50% retracement. So let me get rid of this really quick. Let me get rid of this retracement. You can see we stopped at the 50% retracement. We made a little poke above those highs yesterday, or overnight, sorry, not yesterday. But you'll notice that it's kind of indicative of the euro. Poke higher, reverse, poke higher, reverse, poke higher, reverse. I wouldn't be surprised if we, poked up to 113.80 by the end of the day, or then we go into Friday. So who knows what the hell happens after this? But it's challenging, and I think if I can give you guys like a suggestion, one of the things that I've found more suiting my needs recently is just I've been scalping a lot. If you're in our and by the way, I'm gonna point these guys out here in a second. Here's our ForexAnalytix chat room. You guys can say hi. There's 92 of us in there right now. It's not bad for a Friday. Friday usually pairs back a little bit. You guys are on Jumbotron, so you guys can say hello and keep the language to a minimum. Yesterday, just in the chat room, I mean, I think I scalped the pound like 3 times, taking 10 pips here, and I actually did make a pretty sizable trade in the cable yesterday. Like I made like 40 pips or something. I stayed in a little bit longer than I had normally been, but I've been scalping around, and that's what a lot of us do here. And I got asked a question a couple of days ago, like, is everybody in here a day trader? I'm like, not necessarily. You got Amanda who's sitting in positions for like weeks at a time. I happen to be in the Aussie New Zealand long, and I've been in it for several days now. But we all do a lot of very active trading here, and we post a lot of charts too. If you want to kind of see where the charts are at, which is cool. You can go over to the files, and you can see. There's panda pictures, but you can see all the charts that we post throughout the course of the day. That was just even earlier this morning. Oh, by the way, here's Bloomberg Joe. That's a Tal in our chat room, and that's Vince, who Vince and his wife and I have had dinner before, actually here in Scottsdale, Arizona. He was on these guys are in Vegas, and there's Bloomberg Joe. That's Joe, who's on our team, but was also in Vegas as well. But you can see we post a lot of charts, a lot of options expiry here, charts on what's going on. People fractals. Actually, that's Andy, who's in our chat room now. He just joined yesterday or the day before yesterday. It's nice to have him in there. Anyway, we've got a lot of people and a lot of great talent in here, and that's what we do throughout the course of the day. Is we just talk about things and the markets, and like I said, I do a lot of scalping, and I try to mark up all the stuff that I do here. Yesterday was a little bit more difficult because things are moving so fast. By the time I could go, hey, I just picked up the pound here at 128.36. By the time I could say that, it was already trading on 128.56. You get a lot of it was pretty volatile yesterday. But But anyway, guys, I guess the point I wanted to make here is I've been pretty active. I think scalping has been the kind of like my method of choice as of recently, and that's not always the case, but it has been recently. And I think taking profits quicker, cutting your losses quicker, because it's hard to get into too much trouble. You don't want to get into too much trouble when you're trading around these markets, because it's hard to make it back. So if you find yourself in a loss, it's easier just to nip it in the butt really quick rather than try to work it out, because if you get caught too far on the wrong side of the market, trying to make that money back is going to be very difficult. And today is Friday. There's a lot of uncertainties. There's especially revolving around the UK, which prevents me from being long the euro going into the weekend. I mean, the euro could rally 30 or 40 pips for me today, and I could be long, and it could close at the highs of the day. I would still be a little skeptical about holding it on the long side over the weekend. So it's not going to be my choice to be long or short any euro type of exposure over the weekend. I don't mind having a cross rate out there like the Aussie New Zealand. It's going to be a currency like that is fairly unaffected by by what's happening in the UK, but holding some currency that's a European outright currency, yeah, it's not. I think there's too much risk over the weekend. One of the other things I should note before I turn it over to my colleagues, and I'm sorry I didn't go over a lot of charts today, just because it's choppy out there and it's very messy. Amanda in our chat room, she had mentioned that all the MPs have been told to stay local over the weekend, which could be a good sign, could be a bad sign. It could be a good sign that they're going to sit down and try to hammer everything out, or it could be a bad sign that everybody's voting in to oust Theresa May. Who knows? But that's something we should note, especially if you're trading you have any type of cable exposure. Anything else that I really wanted to point out? Because yeah, you look at the pound, it's like, what do you want to do with it here? It's too close to monthly support, lows of the month. But it's got a little bit of a bid this morning. Yeah, again, what do you want to do? I think some of the better places to be at the moment will be precious metals, and keep an eye on the bond market. Oh, one last thing before I turn over to Steve, which I'm sure he's going to be talking about. Take a look at the 10-year. So the 10-year, let's get rid of some of this stuff. Let's get rid of that for a second, and yeah, we could just get rid of that just for a visual here. And let me draw this. Watch the 10-year, because if the 10-year starts breaking higher, that would tell us that there's going to be some risk off. Bonds rallying, yields dropping, that'd be dollar weak. Dollar yen should be under pressure as a result. That's a risk. That's a risk. And right now you can take a look at here's the 10-year yield. They're hitting lows. That means that 10-year bond is hitting highs. So this is the 10-year yield. This is your 5-year. This is your 30-year. But this is your 10-year yield, and it is dropping. That's typically not a good sign. And you can see at the same time, equities are at lows too. See the S&P? It's the ESA is the S&P. Here's the NASDAQ, Russell, Dow, Nikkei. Anyway, and that's the kind of stuff that I'm looking at intraday. It's like, okay, well, you got bonds rallying, stocks selling off. Probably the place to be. Again, gold, yen. And those are my ideas. So, looks like some counts over 48, guys. That means that that means the UK could vote for no confidence right now. So just that's a risk, guys. Okay. I'm going to pass it over to Steve. Guys?
Yeah, I can hear the partial fills.
I got to go. Bye.
Yeah,
see you guys. TGIF. Bye.
Hello.
Hey, Stel. Hey, coach.
Hey. So,
Hey, Scoliosis is.
What's up?
How are you?
so,
So,
you know,
yeah, I'll go ahead. Stella, I've talked already.
no, it's okay. No, it's okay. I was just going to say, you know, it's all been about the UK. Obviously, we had some minor
So
good
give it to
news
us.
and some minor good news where Michael Gove, one of Theresa May's closest associates, actually didn't resign. He was widely expected to resign. He didn't. Doesn't mean he's not going to, but later, you know, in maybe a day or two. But still, you know, he's still there. And on the other hand, just now we're getting the news that 48 votes are there for for a vote on no confidence. Yes, I think that was broadly expected. I mean, I don't know, with all these you know, these conservative MPs talking the way they were, I think it was almost a foregone conclusion. But anyway, you know, who knows what's going to happen now. The question is, and something that a lot of people are talking about is, okay, so this deal, you know, is probably not going to go through. What happens? You know, is it an automatic thing that we get to March 2019 and you know, that's it? But you know, the thing is, a no deal Brexit has to be voted through Parliament as well. So it's not just a foregone conclusion. You know, there's still a lot of things to play out, although it doesn't look good so far. You know, it doesn't look good. But you know, think about it. You're one of the MPs in the UK, and you're going to vote for a no deal Brexit. You know, there could be mayhem afterwards. You know, nobody knows what's going to happen. You know, do you want to be associated with such an important vote that causes the country to, you know, to go down a steep slope? You know, it's a tough question. I really don't know what's going to happen. There's also talks about May and well, this was before the 48 votes actually, but there were talks about May and her team kind of redrafting another agreement with the EU, and there was a comment on the EU side that was along the lines of, yes, you know, we're going to look at details and maybe change things around. So I really personally don't.
May was claiming just yesterday that she believes with every fiber of her body that this is like the best deal. Yeah, so what of the two is it? Is it the best deal possible, and she believes it with every fiber of her body, or she should actually renegotiate some aspects of it? Because it can't be both, right?
Yeah, not true. And you know, in the middle of all this, I'm finding it very difficult to get a feel of what's going to happen next. So I really don't know. You know, that's it's very tough. So I personally have no sterling position. Actually, no, I have a tiny long sterling Kiwi at current levels, but really I'm carrying very little sterling risk until we get some clarity on what might happen.
Okay.
Otherwise, what else we have? We had the Eurozone CPI printed at 2.2% year on year as expected. So nothing new there. And really,
above target.
Oh, yes, above target. And also there was a headline just a few minutes ago that the EU is going to apply financial some kind of penalty to Italy because of they're not complying with budget targets.
What are they going to do? Take away their Barbie dolls?
I don't know. And you know what? We've said it before. The ECB is the main buyer of Italian government bonds. You know, if they pull the bid, what's going to happen to Italy?
It's going to, the rates are going to implode, and then the rest of the rates are going to start imploding. At least the spreads are going to start imploding for all the South, you know, and probably that's not going to benefit many, right?
Yes.
So I bet the penalty is going to be something of a joke. Let's see. I'm really curious.
They're thinking of renaming cable to the British peso.
It's actually not doing much, you know. Since the headline about the 48 votes came out, cable is still, you know, 5 or 10 pips from where it was. So it was almost a foregone conclusion.
It was a foregone conclusion, indeed. I mean, the market considered it a given. You know something, Celio? I'll keep insisting. I said it many times ago. You know, for me, you know, playing within this triangle is like, you know, especially with the sharp news-driven moves that we get, it's not the kind of trading I like to do. So I'm just remaining patient. And I do think that one way or another, there's a very good chance that we're actually going to break to the downside and then push lower once again. So until that happens, personally, I'm just monitoring this and not doing anything. I'm just sitting on my hands, having to do with cable and cable pairs. But there's something I wanted to show. Actually, Blake mentioned it indirectly before. He said that he thinks that the play might be buying gold and selling yen, and by yen he meant USD yen. So in essence, there is a cross rate for that, and that's the gold yen, right? So if anybody hasn't had a look of what the gold yen has been doing, the gold yen has been in a very, very prolonged uptrend until it actually started building a triangle 7 years ago. So if you're wondering what the gold yen is doing, the answer is absolutely nothing. It's currently sitting in the middle of a very large triangle. I would say that it has a very good chance of breaking to the upside eventually, but I don't think there's some kind of a signal here. So we hadn't ever shown it, although I have a look at it every once and then, and I thought it's a good idea. Now, about the other ratio that I know that you love, Coach, which is what the gold-silver ratio is doing. As you see, the gold.
Two drives.
Yeah, that's one way of looking at it, and
wedge.
Potential wedge, as you see here, reaching this ascending trend line as well. So far,
confirmations.
We've sold at the 161.8% of this move lower.
Yeah. Huh.
So it looks like it can actually end up rolling over sooner rather than later, right? So I
think what, Steve? Don't you think it's close enough? I know that a lot of our audience are long-term precious metal bulls, and without taking any risk, what you could do is sell some of your gold and turn it into silver at these levels. And if we ever regress to the mean, that's going to be a great trade for you, just in physical.
Yeah, absolutely. Absolutely. Don't forget anyhow that if we go to the weekly chart, don't forget that gold lost, as you see, to the lows, 45%. We are currently roughly like 36% of the all-time highs. I said the lows, sorry, I meant the all-time highs. So we're like 36% of the all-time highs, but now compare that to silver. This is the high in silver, and this is where we currently
60% or 70%.
72%.
Yeah.
72% lower.
That's why the ratio went nuts to the upside. More about silver weakness.
Exactly. So at some point,
it may not be done yet. I want to look at the gold-silver ratio when silver's $13, Steve. Pull it up again when we get when we get to $13 in silver.
One thing is for sure that gold-silver ratio seems to be losing momentum for some time now. So usually, a loss of momentum is the first step, the first sign of a fatigued trend, and what usually follows is a reversal. So I do think that we're much closer to a reversal of that ratio than anything else. And as we know, usually that ratio rolling over signals and a period that metals in general overperform. So we might getting somewhat close to that. Now, having to do with gold, gold was on the precipice of a breakdown, but it held perfectly this channel. It seems to be moving higher, so far so good. That leaves open the possibility of another push higher towards the 1260 area that seemed a few days ago to be a possibility that was waning, that was decreasing rapidly because we were plunging lower. Silver had already broken down below its triangle, and gold was testing for 2 consecutive days this trend line. So in all honesty, and I had said it here, it looked like we would get gold breaking down and verifying as well, but it hasn't done so yet. So, I'm interested to see what silver is going to do from here. The reason being is that we did break below the triangle, and now we are back testing this confluence of horizontal support resistance area and the broken triangle's trend line support as resistance. So, for me to trust this rebound in gold and believe that it can extend higher, I want to see silver pushing through here and not getting rejected from here, because if silver gets rejected from here, I find it quite hard that gold can climb that far higher with silver diverging by that much. So let's see what happens from there. Now, having to do with crude, I've already booked 1/3 of my position in crude. I'm still holding the rest because I strongly believe that we should get back to this horizontal support resistance area. Would be nice to see this 58.60 area getting rejected. And I do think that then we can even extend higher towards the 63.60 to 64.40 area. So if we make it above 58, let's say, what would it be? 58.90, let's say 59, I think that we can then extend higher. As you remember, I said very clearly that this long bearish candle looked like to me as a capitulation candle, and so far it's been working very nicely. Very often you need to be able to interpret price action not only based on what it looks like, but also, it's not only about what kind of candle you see, but it's where you find it. So, if I am to see like a very long black candle, I mean, let's put in comparison these two candles that look very similar. We had a long black candle here, and we had a long black candle here. What is the difference between the two of them? One of them is a breakout from a little wedge that we created here. If you go down to a 4-hour chart, you can see that this is a wedge. So this one is a very believable continuation candle after a small consolidation. But then what happens when you find an equivalently large candle after 12 consecutive days of which was a record after 12 consecutive days of a move lower and a 30% move down? Usually that then can be interpreted as a capitulation candle. So you can see that the same kind of price action, putting it in context where you find it, you should interpret it in a totally different way. So I chose to interpret this as capitulation, while I chose to interpret that as continuation. You know what I mean? And I think that so far, it was the right approach in reading the market. So I do think that there is more upside here in crude. The pattern in play has been closed because I wanted, reversals are very, very tricky. So since I know that there are several of our clients that are following closely to patterns in play, I wanted to be very, very tight with risk. But I'm still holding for those that are in the chat room. They know that I'm still holding 2/3 of my initial position. So now I'm comfortably in the money here, and I do think that this rebound has the potential of extending not only in price but also in time. Now, having to do with the rest of the metals, I don't think that we have much to talk about. The only thing worth mentioning here is that, as expected, we had a break higher from this triangle in palladium. So I do believe that we should be getting now closer to some kind of a bigger reversal lower in palladium. As you see, I even drew this some time ago, which was the potential for, this is a 3-drive formation, right, coach? As you see, now palladium is retesting for a 3rd time, as I drew here, this descending trend line in the RSI. So that would be a nice place after a final push above a triangle and perhaps a 3-drive formation, because that would be the 3rd divergence on the RSI. I would like to see palladium failing somewhere here I think that would make for a nice, deeper pullback in a market that has been getting more and more bullish lately, right? So we stalled temporarily in this previous high. We now seem to be breaking higher. I bet there are a lot of people that are going to be buying late in this move higher. So, I think, since the market has very often the tendency of inflicting the maximum pain to the maximum number of participants, I wouldn't be surprised if this was the point that we saw a deeper correction lower. But I do think that this move lower should be viewed as a buying opportunity because the move higher was impulsive in nature. Having said that, let's have a look at a couple of more pairs. I have exposure in this. I like the fact that we seem to be breaking lower now. I do believe that the move higher was lacking in momentum. That's why I had started establishing a short position USD SEC. I sold 1/4 of a position here at a 9, just below 9 actually. I sold another quarter of a position. What was it, yesterday or whatever? And now I'm about to go to break even, and I would like to see a move lower for a retest of 874. So I've started building slowly a position here as well. USD NOK, perhaps this can prove to be a false break higher. We need to give it more time to see, because definitely this is a very, very important trend line resistance. We did get rejected from the previous high, but temporarily we seem to be breaking above this. So if we close the week below it, it's going to look like like in the weekly chart, it's just going to look like another rejection, because only the weekly candles week is going to be above the trend line, and there's not going to be any body of the candle above. So this might be a late rejection from there. We'll have to wait a little bit and see. Now, having to do with USD yen, by the way, is accelerating lower. And if you're long the USD yen, you should be careful here, because we're getting very, very close to this ascending trend line support. I do think that if we, this is what we drew a few days ago, that if we hold this 113.20, 113.30 area, there is the potential of one more push higher towards 116. But if we actually lose this trend line support, be very careful, because I do think that there is a very strong potential for a move towards 111.50 initially, and why not a little bit below 110, just following that. Now, having to do with risk, nothing has changed. Yesterday, yes, we did form quite a bullish candle. On a daily basis, we held this horizontal support area at 26.85, 26.90. But to be honest, price action remains quite heavy for me, since this is the benchmark for risk. The price action here in the S&P can lead to another rebound higher. There's no question about it. But personally, I wouldn't be surprised if we move straight down from here. 26.90, a key level for sure. And let me say here, I said some time ago, and I know that you remember, Coach, when we had a fast look at the Nasdaq that was rolling over, and I said that, listen, the vast majority of the fangs has already broken down, and the only wheel that hasn't come off the cart yet is Apple. But Apple is creating a head and shoulders formation, and we have the earnings report. So I even remember what day it was, because I do remember that it was the day that we had the earnings. That was actually the first day of November. So that was exactly 2 weeks ago. And as you see, the earnings day, the day actually that followed the earnings announcement after the close, was the day that confirmed the breakdown from this head and shoulders formation. Keep in mind that head and shoulders formations on top of large trends are considered by Bulkovsky one of the most reliable reversal formations. Little statistical information here, probably a little bit irrelevant, but the vast majority of the people usually in head and shoulders formation, not usually, statistically, there's a higher chance that they're going to work out if the right shoulder, if a neckline is ascending instead of descending. That doesn't mean that descending head and shoulder formations doesn't work out, but as I said, statistically proven, when the neckline has an ascending angle, they tend to be even more reliable. Now, this was a textbook breakdown from a head and shoulders formation in Apple, a pullback, a retest of this neckline, and a move lower. And as you see, not only that, first of all, we did reach the head and shoulders formation. So that's point number one. Point number two, we broke below the 200 daily moving average. Of course, we've done that in the recent past a couple of times. It never lasted more than like 2-3 days at a time. So it's interesting to see, because if we actually do manage to hold below this 195 zone, I think that there's going to be some huge technical damage being done here. And I do think that then we are going to open the area of 165 for a retest. Keep in mind that from a technical perspective, Apple now being just below 20% at its lows, it actually temporarily triggered, a bear market signal. I know
and
that
it was the last man standing, Steve. All the other FANG stocks already had this outcome. This was the last one hanging in there. So,
exactly. So to me, coach, it's very important to see what Apple is going to do from here, because now we rebounded immediately from closing temporarily in bear market territory, just below 20% of the highs.
right.
But we did rebound. We did create an inside day yesterday. The longer we stay below
Underneath
the
it.
the higher the chances that the rest of the bulls are going to capitulate here, and we're going to see another strong leg lower towards 165. Needless to say that with all the rest of the FANG stocks being in
You mean the flight to safety stocks?
Yeah. Being in bear market territory, I can't understand how people can see the huge risks.
The only better flight to safety I can remember, Steve, was seeing a tape of the Hindenburg.
A tape of the Hindenburg?
The Zeppelin.
Oh yeah, the Zeppelin.
Hindenburg.
burning down. Yeah.
Oh, the humanity of it. That's what I feel for. Yeah, bag holders. All right.
So the only other flight to safety. You remember at some point that they were, cryptocurrency maniacs were trying to convince people that Bitcoin was Bitcoin and the rest of the cryptocurrencies were also flight to safety, because theoretically speaking, they were uncorrelated.
Right.
To the rest of the market. To be honest,
they're correlated.
They were actually half right? Because when something, no matter what the rest of the markets are doing, just keeps moving lower, because what cryptocurrencies have been doing since December 2017 is that irrespective of what the rest of the markets are doing, they keep moving lower. So in that respect, I have to give that to them. Yes, it seems to be uncorrelated to the rest of the markets. Now, why would you want to own something that just goes down? That's beyond my understanding, but who knows?
Greg called this crash in Bitcoin Sunday.
Coach, let me tell you something. Greg is an amazing analyst and trader. There's no question about it. But irrespective of what Greg believed, there were two alternatives here. Only two. There was no third alternative.
Right.
One, that Bitcoin was basing for such a long time that it was giving everybody the ability to buy the low.
Everybody.
How many times have you seen market do that?
Keyword. I'll give you 3 months to buy support.
Exactly. I'll give you 3 months to buy the low. Don't worry about it. This is the low, and I'm going to give you so much time to buy it that everybody's. Yeah.
Go take a
everybody-
vacation and come back in a month, and you'll still be able to buy it.
To buy the low.
That's the
Yeah.
forward,
So, whenever you see something like that, what tells me is the following. The bulls are trying to hold. The sellers just don't budge. And when the sellers don't budge, because we came on the support from the upside. Since by the buyers just barely holding on the support, the sellers didn't get panicked and they kept on insisting, they kept on pressuring. There was one way this would break out to the downside.
Yeah.
To be honest, I would bet a lot, but I just don't want to create, I don't want to create an account, etc. I mean, for me, the move lower from here was the easy move to predict. I have to tell you that predicting that this is going to break lower was an easy call. What is not such an easy call is the following.
Where to buy?
Yeah, exactly. I wouldn't be surprised if this ends up being some kind of a trap. You know what I mean?
Yeah,
Yeah. So
shake out the last of the weak hands.
Yeah, exactly. So I found it almost impossible that we would actually indeed bottom out there. But on the other hand, I wouldn't be selling right now after seeing, the big drop below what was considered like the huge level, because now everybody was looking at this huge level, and now everybody is thinking that, okay, so now this is like critical support. We broke below it, and that's it. It's done. You know very well my opinion about cryptocurrencies. I think that the vast majority of them, by the way, we now have 2,100 cryptocurrencies. 2,100. Yeah, keep in mind that last time I checked, Bitcoin was 55% of the whole market. So to be honest, Bitcoin is more than half, has more than half of the money that are invested in cryptos are still on Bitcoin. So that's probably why it also held out for that long. Probably because between crypto
sponsorship,
between crypto maniacs, Bitcoin is considered
like IBM.
A flight to safety. Yeah, exactly. The blue chip. So I bet that a lot of them were shifting from fringe cryptocurrencies and ICOs and whatever the hell, dog coins, cat coins.
I had a bottle of Ripple. I had a bottle of Ripple last night, man. Ugh. And listen to Joe Bonamassa. Brought me back to my days on Skid Row.
So yeah, let's see what happens from here. But cryptos seem to have, to be in trouble. So, from the 2,100, there is no question about it. The vast majority of them, I believe more than 98%, are headed to zero. That's it. Now, is Bitcoin and 2, 3, 4, 5 others going to survive? They might. But from the 2,100, I bet you that more than 2,000 of them won't even exist in a couple of years.
They'll be wallpaper.
Oh yeah,
coin paper. Sorry.
Yeah, absolutely. So let's see if we have any questions.
They can make good ashtrays, I think.
If only they were tangible, but they're not even that.
Oh. Okay.
Could you have a look at the USD ZAR? Yeah, I can have a look at the USD ZAR, and you know something, the USD ZAR was building potentially a nice head and shoulders formation, but the symmetry has been completely lost. You know something, you can even read it in technical analysis books. Usually, when you see a head and shoulders, a potential head and shoulders formation failing, is because it's not a head and shoulders formation, it's because it is a triangle. Right. So very often you can misinterpret a potential triangle to a building up head and shoulders formation. So yeah, there is still the chance that this can break to the downside. But to be honest, since now we've lost completely symmetry, I would have to say that you must also be aware that those two trend lines do matter. And, the chances that we might break to the upside have increased since this has already lost the characteristics that we were looking for in a head and shoulders formation. So I would have to say that this looks like a consolidation after a move higher. So now I've shifted in believing that there is at least an equally high chance of breaking higher. Anyhow, these are the two trend lines you should be monitoring. Obviously, since this is a triangle and not a megaphone formation, the two trend lines are converging, which means that sooner or later we will have to have some kind of a resolution from this. And I do think that the breakout is going to produce follow-through. So I think you need to remain patient, keep monitoring this and seeing which direction this is going to break. I think that buying the breakout, which anyhow buying breakouts, keep in mind, is statistically speaking the most profitable trading approach, especially if you're buying breakouts in the direction of the trend, right? So that's what I think about the USD ZAR. I don't want to jump into other conclusions. I think we just need to wait a little bit longer, and the market is going to tell us what's happening here. But as I said, there is a decent chance now that it's going to break higher with what it has formed. And I'm saying that despite the last 3 days being, bearish, right?
Yep, I'm here.
My pleasure, Kerem. Oh, it's already 4. I didn't even, no, 4, I mean my time. Okay, so do we have an interview today?
Not today.
Okay, we don't. So let me see. I'm growing with pace, improving P&L every week. Oli says, that's very nice to hear that, Oli, although we know Oli from the chat room, and yeah, he's been doing very good for himself, and I'm very happy for him.
Yeah.
He's gone a long way. We do have people are writing that we do have the dollar weakening, and yes, we are seeing the dollar weakening, and as I said, USD yen approaching support. As you see, Euro USD, I'm monitoring this descending channel actually in Euro USD. So for me, a confirmation that Euro USD is actually moving higher is going to be a break above this confluence of resistances of this descending channel's resistance and this horizontal support resistance area at 114.50. So 114.50 quite key to me. If we do break higher, I do think that we can make it higher towards 118.50 once again, and perhaps this, as Blake mentioned, this will prove to be a false break below 113, perhaps a break that trapped a lot of people in the wrong direction at the wrong timing once again. Now, having to do with stock indices, just let me mention 2 more things. One is that, as we said, DAX remains bearish below 11,800, so nothing has changed here. And we're getting more and more confirmation that the rejection from this confluence of resistances in the Nikkei was important. So USD yen, Nikkei already has had this technical rejection. So perhaps we're going to see USD yen following today by breaking below that descending, that ascending trend line support. So if we don't have any more questions, let me see. Yep, we don't. I'm going to wish everybody a lovely weekend, and we're going to be in the chat room, and we're going to be, of course, issuing updates as we always do during the day for ForexAnalytix subscribers. So thank you, Coach. That was a very nice week. We had very nice interviews.
Yes, you did a great job as my co-anchor. No, I'm you bring it adds.
Thank you.
It's all right. I can share the spotlight with you, buddy, any day. All right. So great work, Steve. Great trading for you this week and the team. And, these are the kind of weeks that should affirm your confidence that you're hanging out in the right place, because FACE is the place where people come to become an ace, but it's only the tip of the iceberg. Really, the chat room is the heart of the matter. So get there to the chat room, because we're done now, and Blake's probably scalping his butt off with Amanda right now and Joe. So adios, everyone. Have a great weekend. Don't just count your pips, count your blessings. We have a holiday schedule next week. Thursday, I believe, is Thanksgiving. So, we'll see what we can exploit before the turkey goes in the oven next week. Adios, everyone. Best team on the net. Best webinar on the net, free or paid. Signing off.